Welcome to RBC's Markets in Motion podcast, recorded May 18th, 2026. I'm Lori Calvasina, Head of U.S. Equity Strategy at RBC Capital Markets. Please listen to the end of this podcast for important disclaimers. The big things you need to know. First, the investors we met with this past week in our trip to London and Switzerland were keen to explore other opportunities in U.S. equities beyond the semis tech AI trade, but had difficulty envisioning what those opportunities were. Second, we highlight continued outperformance of high price momentum in our factor work and what we're seeing in our valuation work for this part of the market. We also note a pickup in the rate of upward EPS estimate revisions for the S&P 500 as reporting season slows down, and the signal we're currently getting from S&P 500 and Russell 2000 forward PEs. Things are moving up, but aren't universally back to their 25 and early 26 highs. If you'd like to hear more, here's another 5 minutes. Before we jump into the details, we need a favor. The 2026 Extel, formerly known as Institutional Investor All-America Research Survey, will open a little early this year on May 26th and run through June 12th. If you found our research and podcast helpful, we'd appreciate your support. Every single vote matters in this category, which is traditionally extremely tight in the rankings. Please take a moment to vote for Lori Calvasina by name in the Portfolio Strategy category, and let us know if you need help finding the website to vote at. Now back to regular programming. Takeaway number one, what investors wanted to talk about on our trip to London and Switzerland last week. Some of the topics they were most interested in discussing were AI earnings and sector views. There was overall more interest in positioning than broad market direction. Midterms came up in several meetings as well, with curiosity about our thoughts on whether additional stimulus ahead of the event was likely. We said no, and interest and surprise when we noted that betting markets have begun to start turning more optimistic about the possibility of a Republican sweep. The health of the U.S. consumer and our thoughts on small caps were other recurring topics. Iran came up less than we expected, where we sensed wariness as opposed to panic. Fed discussion was light, and there wasn't a lot of focus on the inflation prints, but we also proactively walked investors through the potential impact of higher inflation and interest rate assumptions on our S&P 500 outlook via assumptions in our valuation and earnings model, which we discussed in our most recent target price update. The conversations we had on AI earnings and sectors were subsets of a bigger discussion. Most investors we met with were very much on board with the idea that tech broadly and AI specifically were extreme bright spots in the earnings backdrop. Our charts on tech, energy, and materials boosting consensus EPS growth forecasts for 2026, as well as our chart on AI names showing expanding EPS growth leadership in 26 compared to the Mag 7 and S&P 500 broadly, were both well received. Despite this, and some noting they'd had plenty of exposure to this trade and were performing well, there was a clear interest in exploring what other areas of the market might offer better opportunity going forward. There seemed to be agreement with our view that alternatives are tough to identify. On commodities, there was more interest in talking about energy than I've seen in a long time in Europe. We pointed out that valuations still look slightly attractive in the S&P 500 sector. On financials, while we wouldn't say everyone was bullish, there was clear interest in discussing this sector, and our chart showing how capital markets valuations got extremely high last year but have come down was well received. And consumer staples came up in defensive discussions. Investors shared our frustration with healthcare, where we've seen weaker earnings revisions and flows, and we noted utilities might get caught up in affordability concerns around the midterms. One idea that came up in conversation that seemed to really resonate was that of staples problems being well known and that it was already cheap. Unlike, say, consumer discretionary, where problems are known but the sector looks pricey, or industrials, where companies have been emphasizing the ability to manage through and the sector looks expensive. Moving on to takeaway number two, what else jumps out? On the momentum trade, we're keeping a close eye on our work that looks at the performance of high price momentum relative to low price momentum within the S&P 500. On our work, high price momentum has continued to rise and outperform low price momentum stocks. In a new chart, we've started looking at the next 12 months PE of both high and low price momentum stocks. We've seen PE expansion in high price momentum and contraction in low price momentum. Relative to low price momentum, high price momentum valuations are a little above average, but not highly stretched. On earnings revisions, we're now seeing a meaningful uptick in earnings sentiment, the rate of upward EPS estimate revisions for the S&P 500 as reporting season winds down. We're also seeing this for the index's biggest market cap names, AI-focused names, the rest of the index, and the Russell 2000. Geographically, strengthening upward EPS estimate revisions in the U.S. stand in contrast to continued deterioration for Canada, Australia, UK, and Japan, and could help extend the U.S. leadership trade in terms of performance. And last but not least, we're keeping an eye on the stock market's temperature. Forward PEs are approaching past highs for the S&P 500 and Russell 2000 on a next 12 months basis, but not an FY2 basis. This explains both the increased angst we've noticed among some investors of late, along with the stock market's continued climb higher. We could say the same thing about investors' desire to find opportunities beyond the semis tech AI trade for opportunity and difficulties in doing so. That's all for now. Thanks for listening, and be sure to reach out to your RBC representative with any questions.
This content is based on information available at the time it was recorded and is for informational purposes only. It is not an offer to buy or sell or a solicitation, and no recommendations are implied. It is outside the scope of this communication to consider whether it is suitable for you and your financial objectives.